All right, coin traders, what's going on? A lot of red today in the markets. We do have Bitcoin down over 5% right now on the day. Most other cryptos are down double digits. So just kind of want to talk about what we're expecting now for Bitcoin and the rest of the crypto space. As you can see, we're testing the support line right now, which was an extremely strong resistance for 3 weeks here on this initial consolidation before we ultimately had our little pop and rally, ultimately topping out right at 31K. So now back testing both the upper resistance level, which previous resistance anyway, which come in right at 28,692. And then right below that, we're going to be looking right at the $28,000 level, which is the big heart line for this big center point of mass. Let's go ahead and clear this up yet. And then I do want to talk about the VPVR, volume profile visible range here next. Let's go ahead and turn that on. You can see that overall, we're still sitting on top of the big point of mass. So likely we can still expect a little bit more support on all of this over 3 weeks actually of trading. So ideally, in a perfect world, we would find a lot more support here, establish this as a very nice support point, and then find the next leg to the upside. This is one of the scenarios that we talk about why we actually like finding periods of resistance and consolidation, because typically when we do find a retracement, that usually does lead to a lot more consolidation and the establishment of some longer term support, which is helpful, especially too, since we have so much volume over here on the volume profile visible range chart. So what we are trying to say, though, is if the $28,000 level does ultimately break, then we would be looking at seeing a retracement down to the $25,000 level, which I think is still definitely a possibility. Now, one of the things to keep in mind, too, is that we do still have this trend line from the longer broadening wedge that we are forming. So we did backtest it as previous support already. So this actually lines right now, not only with the support zone, but also with the trend line. And then in addition to that, we also have the support right now sitting in between the 26 and 50 period EMA. So hopefully we can see enough of a consolidation to allow the 50 period exponential moving average to run up to the zone and help maintain that as support as well. We did see the last time we did have prices get below the 26, we actually slipped and fell below the 50 and then actually had quite a significant retracement before the Silicon Valley Bank news propelled Bitcoin back to the upside. So overall, we could still be seeing another significant retracement, though, if we do in fact see these such strong lines, typically you would think. So if we do have a break below previous resistance, price resistance anyway, as support, the exponential moving averages, and then also this rising trend line from the broadening wedge. Those are our three key support points to look out for, and that's why we are still thinking that a break of that would actually push price down to the $25,000 level once again. And then you can see this clearly as well. Let's go ahead and flip over to the 1 week chart. You can just see how much of a significant level $25,000 was. And actually, this does align a little bit better with the weekly exponential moving averages. And that's another reason why we think it's going to be a great target. So previous resistance and also a little bit of support on the way down. Previous resistance finally smashed through this with this nice big bullish candle on the Silicon Valley Bank news. And then ultimately consolidation for a while on this period, which is why we do hope that it does stick up actually, especially since this level was actually a big support point before last June where we did flush to the downside. So plenty of technical reasons to be eyeing this level, but from the support point to the downside, we would still be looking at the $25,000 level, which also would backtest these weekly exponential moving averages as that longer support. So that still could be a very nice sign and then be bouncing on our way from there. Most of these weeks have seen week over week higher lows though. So if we actually look at a Fibonacci retracement from the low right before the Silicon Valley news, would actually be looking down to a low support point. Actually, 23.6 would still be maintaining 28.335. So this is actually a very nice level to retrace to in order to continue another upside run after that. But below that would be our next support point coming in right at 26.656. And then below that's the 50% retracement, which pretty much is what we're eyeing right at 25,300. We go ahead and look at a Fibonacci on the 2 week, for example, then we can look at from the previous year's lows down to what we'd be looking at as being the 38.2% retracement on that scale, which is right at 25,060, so still a possibility. And then the 23.6 is still at 27,337, so a little bit lower than our current targets. But if we actually go ahead and look at this 2 week chart as well, you can see how relevant and reliable so far these exponential moving averages have been. So we've been looking at a big point of support before we found our initial big move candle from the Silicon Valley Bank news, and then now maintain support on top of the 50 period EMA. So for the 50 right now, we would be looking at support down to 27,489, and then the 26 right now is going to be at 25,427, down to the bottom 12-period EMA at 24,205. So overall, the point we're trying to make is a lot of previous resistances on this chart over the last 6 months or so have led to a lot of great resistance points being broken that hopefully can now be providing higher lows for the support, since we do ultimately have to have a retracement in longer-term healthy markets. Flipping on over into the monthly chart really quick as well, you can see the current month that closed was a very nice break on top of all 3 of these exponential moving averages. So a complete smash, especially since we were getting stuck up at this very relevant 50-period exponential moving average. But that's not to say that it actually wouldn't be impossible to see prices dipping down, testing all of these, and actually forming a long lower shadow on this current monthly candle, which we do still have just over 11 days until we close. So I think best scenario right now would be a little bit of sideways trading, defending the $28,000 level, maintaining these exponential moving averages, and kind of forming a candle like what we saw out of February, which could then hopefully allow the May candle to be like what we experienced in January and March. There is going to be a lot of overhead resistance, though, heading into about 35,000. So as we can see on this monthly chart, a lot of long lower shadows and a lot of long lower wicking and support being found on this level. So we know that overall it is going to be a point that a lot of buying was happening on the bull run. So especially since we have broken to the downside, that's probably going to be a pretty big point of selling, especially after seeing such nice gains over this year. So if we do in fact look at from the bottom to that level, for 35,000 anyway, that would be almost 120% gain to that level at 130 or at 35,000. So I definitely think we could experience a lot of sell pressure unless we start to get a major shift in sentiment or a lot of good bullish news does start to come in at that point. Personally, though, I'm not really expecting too much to go on over the next month or two, but obviously we don't want to see a lot of bearish follow through for days like today that we have been seeing, because this is obviously the biggest pullback for a daily chart that we have actually seen. Since our most recent flush a month ago, we did have the price pullback right before all the Silicon Valley retracement bullish news. Fractals are kind of a little similar though, since we have had a lot of growth right in the 12-period EMA, a quick little bounce, and then seeing a new higher high before a push to a lower low. Could be ultimately what we end up seeing, kind of like what we're seeing now, high running off the 12-period EMA, and then running up to a new higher high before a flush. So a very normal pattern right now, but like we said, we do need to confirm some of those lower supports. So especially as long as 28,000 holds even down to a potential wicking down to about 27,000, I think that would still put the bulls in a very nice place to still maintain control despite losing some of the shorter term uptrends. Do let me know what you think down in the comments sections below, whether it's your issues, disagreements, predictions, all that stuff. Do love getting back to you. That is going to go ahead and wrap it up for the show today, though. If you haven't done so yet, please hit the thumbs up, like, and subscribe button. Do appreciate all the continuous love and support. It does mean so much. Stay safe, take care, and I'll catch you back in the next video.